at the median dot of the 18 members of the FOMC. Now, what's interesting is that if you try to draw out exactly which one is the median dot, you'll see that it only takes 3 more of those 18 officials to upwardly revise up their dot plot projections to then start saying that maybe the median dot will forecast a 25 basis point hike by the end of 2023. Could that happen in this meeting with some of those inflationary pressures picking up? Could definitely be the case, which leads us into the second question that I've got, which is everyone still team transitory? This is obviously the talking point that everyone's been kind of floating out there since we saw inflationary pressures rise from the readings on PCE, CPI as of yesterday, the PPI. We know that core CPI, the consumer price index, rose by 3.8% year over year. And we're starting to see some Fed officials blink a little bit in response to those higher readings, maybe wondering if it's not necessarily just the supply chain issues, which leads us to the last question here, which is, did you have the talk, not that talk, but the taper talk? This is something that the Fed has been alluding to for a while. We know that the Fed balance sheet has tilted just above $8 trillion. So the question is the June meeting the expectation for Jerome Powell to begin those taper talks? Now, on the street, you're hearing the chatter that this is likely continuing to be a dovish meeting, that if there would be some sort of hint at a taper talk, it might be as subtle as only a staff presentation in the FOMC meeting, as opposed to something that might be more codified in the statement or even commentary from the Fed chairman. But of course, we'll have to watch for all of that. Again, the statement comes out at 2 p.m. along with those economic projections, and the press conference will be at 2:30, and we'll have the full coverage of that right here on Yahoo Finance.
Hey, Brian, do you think that the Fed is going to get questions at the presser about the persistently low 10-year yield? That's something that we've been talking about recently. And, you know, one would think that the Fed is watching it also. I'm curious what they would have to say about it.
Yeah, absolutely. I mean, if that were to be a question that were lobbed to the Fed chairman, that would be a layup as easy as what Kevin Durant was able to do on the floor in the Barclays Center yesterday, because low bond yields just confirm that the Federal Reserve has gotten its functional response to current economic data into the market. When we saw those above expectation readings on specifically the May consumption, the CPI, that really showed that the bond markets were not flinching at the idea of inflation rising above the Fed's target, which it is right now. Now, of course, that means that the Fed is kind of getting its point out there that these are likely to be transitory, because otherwise bond markets likely would have ripped up over the concerns that maybe the economy was overheating. Now, of course, will that continue to be the case if those inflationary readings continue to tilt higher in coming months? That's going to remain a question. But if Jerome Powell is asked about it, he would likely say bond markets are confirming what we were already telling them over the past few months.
Brian, if there's a surprise to be had in the dot plots, what would it be?
I think when it comes to the surprise, we have to watch for those 3 members that could, if they decide to upwardly revise their 2023 projections, would change that median dot, as I kind of laid out. Now, of course, when we talk about the dot plot projections, we know for some time that Jerome Powell has been really actively de-emphasizing their use in terms of a kind of projection for where the economy is going to go, because all of those 18 members will obviously have different views on the economy. So it kind of raises a question, why does the median dot matter? In fact, we don't even know who the median dot is. It's very difficult to try to pinpoint exactly which dot is attributed to which FOMC policymaker. Now, of course, when it comes to markets, we know that they almost read these dot plots like they're canon. So obviously, if there were to be some uptake in where that median dot is, that could indeed present some sort of hawkish risk to this meeting. But at least from what Wall Street is expecting, it seems like most people are expecting that median dot to remain pinned down at near zero through 2023, at least for this meeting.
I mean, we do know Kaplan's dot. So at least we have that one identified. We have that one ID'd on the dot plot. But Brian, we talk a lot about transitory inflation pressures and the dot plot, but it really does seem that Chair Powell right now is remaining most focused on not repeating something that has come up a couple times in your lifetime, which began in 1993, which of course is a taper tantrum for the Fed as they unwind some of these policies. Right, 2013 is really top of mind. The 1994 surprise, that really shocked bond markets in the middle of that expansion, and it seems that while the media is focused on inflation because that has kind of a consumer side of it and the technical side of it, for Powell, it does seem like avoiding a taper tantrum is top of mind right now. And I just wonder, as someone who's so focused on the Fed if you feel like maybe we're gliding past the difficulty or the focus, that Powell and others are putting on that part of removing policy here?
Well, you're right. I wasn't really sentient in 1994, but I was in 2013. And the issue with Ben Bernanke in 2013 was his remarks in a congressional hearing that kind of came before anyone had been expecting it, at the idea of possibly tapering the Federal Reserve's quantitative easing program, which was really the first time they had done it on that scale. Now, this time around, we know that the Federal Reserve has a playbook when it comes to quantitative easing. So that already is a benefit to Jerome Powell, that this is something that the Federal Reserve has done before. People are familiar about it. People are thinking about it. But I think that also plays into the very interesting linguistic device that the Federal Reserve deployed this time, which is that idea of talking about tapering. Now, that's not necessarily an official part of its forward guidance, but that is one very clever and creative way by which they've been able to communicate to markets. Not only will we give you a heads up when we're about to taper, we're going to give you a heads up when we want to give you a heads up about tapering. And I think that's been a very deliberate measure, which they've had for many months in preparing the bond markets for these conversations. And again, based off of the reactions to those high inflation readings for the month of May, it seems like it's working so far. The question is whether or not it will continue to work in the coming months.
We shall see. Today might give us a little bit of a hint. Brian, thank you. Appreciate it. Well, something else, of course, the Fed has continued to watch. We have continued to watch. Has to do with what people are buying. And that's something that Miles wrote about in this morning's morning brief. We got the retail sales numbers yesterday. We talked about that. They came in disappointing, but it is really instructive to look at the breakdown of area by area. As we talked about yesterday, the stuff where we're seeing shortages saw drops in sales, autos, furniture, etc. But there's one area in particular that saw strength. It has to do with the fact that Miles is going to have to give up his sweatpants and shorts at some point when we go back into the office. Maybe, or not. I don't know. Maybe he's just going to buy some new sweatpants and shorts, new office-ready sweatpants and shorts. I don't know, Miles. The suspense, we'll have to be in suspense on that front. But we know that other people were buying clothes last month.
Yeah, look, as we know, camera here is beautiful. Lighting is beautiful. No issues with this home setup. But, I mean, look, if you basically, I looked at yesterday's retail sales report, and I thought, of course, of Brian Sozzi and a story that he's been writing about through the lens of the corporate results we've seen, from the likes of your Macy's and your Targets and your TJXs, about how their consumers have been beefing up on apparel and really coming back to that category. Now, I don't think any of us believe that apparel and clothing stores, department stores aren't still secularly challenged, but they are clearly in a cyclical upswing. And I think that, the instructive part of this chart, which we included in today's morning brief, is not only are clothing sales up, 200% over the same month last year, 765% was the increase from April 2021 or from April 2020 into 2021. Obviously, an artificial number based on the collapse in clothing sales that we saw in the absolute depths of the pandemic. But the level of clothing sales are above anything that was in play in the years before the pandemic began. And so we see this shift into clothes as the way I think about it. And Saz, I'm interested for your thoughts on this as well. We've talked a lot about how the economy had to go from services to goods because goods were the only thing that you could consume. Now we have services reopening, but clothes are really a complement to services, right? If I want to go out and go to a restaurant, go on vacation, I probably want something new to go with that. And I wonder for how long these companies think they can kind of ride this reopening trade.
Well, it's going to be, I think, for a while, Miles. And as I look into the back half of this year, this may be the single biggest, just a perfect storm of events for apparel makers, perhaps the best investment setup for retail and consumer discretionary names I've ever seen over the course of 17, 18 years of doing this. You have very strong demand to the point where consumers are not just buying one polo shirt and one T-shirt. They're buying 5 shirts and 4 pairs of pants because they no longer fit in anything, and they want to have some of the lightest, hottest styles because they haven't been shopping in many respects for the past year and a half. Secondarily, what are consumers doing, and just in terms of what they're paying for these things? Prices are up pretty significantly for tops, bottoms, sneakers. We saw that through the lens of the Consumer Price Index report last week. that is another good thing for a lot of retailers. And then lastly, inventory is very, very low. You go into a Macy's, you go into a Dick's Sporting Goods, inventory out of stocks remain very, very high. Again, another perfect thing for a lot of these apparel makers. If you don't buy it now, you may not get it. And guys, for me, look, we'll be going back to the office soon. I'm looking for a new suit with some stretch material in my waist. I need a new type of suit post-pandemic. That's just me. I've been wearing elastic waistbands for the past year and a half. I need elastic in my suit waistband.
Amen to that, Brian Sozzi. We'll get you a Lululemon suit if we can.
Please find it. I'm your guy. Please find it for me, please.
You know, something else that I think supports the idea that.
Yeah, but honestly, like when you look at these things, obviously there was a pandemic. The people have not been going out that much. People are working from home. So obviously, when they go back and consider the fact that many of the stores were closed, so it's really understandable that not only the workers are not there yet, people gonna have a rush into buy stuff. So that's really understandable. So it's nothing, in my opinion at least, to worry about that, unless there are other stories going on.
There's also the effect of going out and saying to somebody, "Oh, I like what you're wearing. Where did you get it?" Or seeing someone on the street and noticing a trend can also help drive some momentum in some of the clothing buying. We'll see if that's just me or if other people are doing the same thing, Miles.
Miles, I saw when we met last week, Miles, you were wearing some great pants. You know, that inspired me to go out to Bonobos and buy a lot of new stuff from Lululemon. So thanks, brother.
I did notice Miles's pants as well.
They're regular Lululemon pants. There's nothing special. There's nothing special about those pants. And I think, Julie, to your point about seeing what other people are wearing and then having interest in that, there's also an element, and I find this is where I'm least satisfied with what I have to wear right now. And the summer is the worst apparel season anyway. You know, I mean, I'm not a male model, so it's not like I want to, you know, wear a tank top and show off and all that stuff. There's nothing to show. So I think ultimately I'm kind of just tired of what I have, and knowing that other people will see the kind of, you know, boringness, the plainness or whatever, what's in the closet, is also a little bit distressing at times, though I suppose we all age out of that, and eventually I won't care, you know, like all suburban dads. But for right now, I try to think maybe I care that someone sees me wearing just a regular blue polo, because that's pretty much all that's in there at this point. Once you get to the layers, you know, there's more interest, fall, winter, so on and so forth. In the summer, though, I don't know. It's kind of a fraught endeavor. So we will leave that. We'll leave that for today. And I know certainly our viewers have many thoughts on this, and I'm sure we'll hear about them in the days ahead. All right, coming up on the other side of this break, we'll take a look at some market movers here, including cruise lines on the move. Analysts growing more constructive on the space. Back with that right after this.
Yeah. All right. So we have 15 minutes before the market opens. So let's get into the story. Let's see what are the things that we gonna have in our plate today. All right. So starting as always with the losers, and we start with Roblox. That is minus 9.5%. Why is that? You may ask. Roblox have reported that their active users, which is I think around 430 million, it has been reduced 1% compared to the last month. 1%. And that is actually the reason that Roblox is actually coming down. Anyway, I guess when you have such a, you know, run up here, so it is 60% movement up, you have to have some sort of pullback as well. So any bad news can actually help with that. And also the fact that many people, like if they were trading, they could already take their trade off here, but they can take their money off here. But then the interesting part was that despite the fact that Roblox had 1% lower active users, the average hours spent were increased I mean, the gaming time has been increased 1%. So I don't know. It was a little bit overextended in my opinion. I still actually am not a buyer of Roblox at these prices. I'm not saying that it's not a good stock. I'm not saying that it cannot go higher. Definitely it can, but I'm more into the idea that if I can buy, I can buy around the 70 range and below that. I have a feeling that it can get there still, but I'm not sure of that. And if it gets, I don't know when. So this is at least my opinion. It has been flying off a lot recently, so that's reasonable. Then we have XBEV or XPeng. Let's see. We have Riot Mara. Well, minus 5%, 4.5%. XPeng we have a minus 4%. Then AMC. AMC is not looking exactly great, but you know, it's not really that much down. Let's see what happens. We have Microvision, we have Can, BlackBerry, Syneos Surgical. These are probably the main losers almost 12 minutes before the markets open. The next side is actually SoFi. I did not buy SoFi, and I am not planning to buy until it come back to some sort of a resistance, like really around this 18.5. This is the range that I like. Think about SoFi better 18, but generally speaking, I haven't done any study on SoFi. This is not me telling it's a good one or bad one. I don't know it. I know a person who is a very, very delicate stock picker, and he actually picked it up around 22, 23. So we'll see about that one in the coming months. GM Run, Sunrun, interesting. Interesting that Sunrun is up 2%. Sunrun and David Burr from board and from role as a strategic advisor. Okay, I actually don't see any news that any of these can actually run the stock, but again, it's 2% only. So OCGN, Boxell, DraftKings. DraftKings was hit by a Hindenburg basically short report, and the idea for that was that they were basically saying that DraftKings is linked to some black market activity, some illegal raids being done in, where was it, Taiwan or Thailand, something, and because of that they expected this to go down. So since the market opened, the stock has started moving up, and I did not add anything, obviously because I didn't read the short report properly. After reading it, I think it really doesn't have much merit. There were some old news about DraftKings which meant more sense, but they were old news. They were already priced in. So it just that the recent link they were trying to create basically between some black operations and black market operations and alleged illegal operations to DraftKings, which was a little bit weird in my opinion. It didn't look like to be genuine. So yeah, but again, that being said, I thought that DraftKings will have a move downward more than it had. Not that the short report was really reasonable. Usually the short reports, no matter how bad they are, have an effect, and based on the experience I try to actually wait to get more. I have already a position anyway. I don't think, I mean, this was a good change. 12% was honestly a good down movement, but I don't know if it wasn't getting to 44, I mean, which I have for some reason. Yeah, there are some support there, but if it was getting there, maybe, but mostly around 40, that will be my really price target. Oh, sorry, buying price for DraftKings. So that is about that. Let's see if we have anything else going. DraftKings shares. Ooh.
DraftKings taking a different approach. And then secondarily, I'm here to promote my TikTok that is going up on DraftKings very shortly on the Yahoo Finance page. TikTok.
How are you doing that? Like, who's filming it? Do you have a script? What's your thought process here?
Yeah, what I did for this one, Miles and Jules, I just took my phone and I went like this in selfie mode, and I just taped it like this in my parking garage.
Interesting. So there's no production. Like we didn't swap. Like you didn't change outfits. There's no text. It's just you speaking.
No, actually, I am wearing an interesting hat, so a deep tease there.
Okay, can't wait for that.
I just really like Brian's.
Come on. Doesn't want that.
I'm not sure how he would do a TikTok on the next one. Cruises is something that we're watching as well. Maybe you could do like one of those cutouts of the water, and like a boat, and kind of do the old school.
So guys, but the interesting point to take, DraftKings was bought by ARK. I actually don't know. If that's a good news or bad, because it is a good news, but anything that Cathie Wood has been touching, it was going really down. Not that she's not doing well. I think she's fantastic. I think I really love her approach, but just saying.
Months ago, as they got clarity into these reopenings for cruising, but let's keep in mind the businesses emerging from the pandemic in terms of cruises are a lot different than when they went in. There's a lot of new debt on the balance sheet. And hopefully, for the sake of the investors that are still riding the cruise trade, this demand better come back very, very strong if these companies are going to meet their debt obligations in the coming years.
Yeah, we'll see. I don't know. Maybe if you have to get on a boat or do a TikTok about cruising, maybe that'll help.
Yeah, I put on my put on my floaties. I'll go right in the water, take a picture next to the big giant ship. I'm all for it. I'm ready to go. Let's go right now. Let's do it.
But obviously you have to wear a suit, floaties.
Totally fine. Whatever you need.
I think that's what the brand calls for.
I mean, Lonely Island wore tuxes in the video, so I think it's fine.
All right, we're going to take a break. When we come back, we'll talk the opening bell and expectations from the markets for the Fed. Stay with us.
Yeah. All right. Let's see what else do we have here. Okay, so my plan for today is to go around a list of things that I have. These are obviously some of my main targets right now: Square, Etsy, Qualcomm, Crowd, Net. But many of them have been moving up, like Crowd and Net, like crazy. So they're nowhere around my buying price. Qualcomm, actually, I'm thinking maybe to go a little bit above that buying price if it comes back to 130 or something like that. Etsy, we're gonna see how that turns out. Square also is really jumping, so I don't think I'm gonna get a Square anywhere. But Tesla, I think it can actually touch 570 that I expect. Upwork, not really. Pinterest, no. Facebook, for me, Facebook like really below 300, like preferably 200 is a more reasonable. Microsoft, I think anytime buy is a good thing. Neo, I don't think I'm gonna get it. MDB either. Twilio, let's check Twilio actually. I have not checked Twilio, so yeah, yeah, it doesn't seem like a big enough movement. It has been going down a little bit, but I mean, honestly speaking, 280 is a little bit, now that I'm seeing maybe 300, it's a little bit, 306 is a more reasonable number if you want to actually keep this longer term. But who knows, we'll wait. We are not really in a rush to get anything. Chewy, I think we might get Chewy when it's around 70. It's 73 already. I can definitely see QE to move down. If there is a bad news, I expect many of the stocks actually move down, so it's not really out of our reach, at least for today, and based on the prices that we are looking to get there. So let's see if we have anything else to discuss. Not here. So SoFi climbs after it initiates at buy. Okay. So SoFi's jump was basically because of this coverage. Yeah, Heritage Global, not interested into that. I want to see this one. So let's check some upgrades, and we want date for 16. Yep. EVRG, Dish, RCL. Okay, so they went up on everything. Yeah, I'm not really thinking of buying that, but EVRG, let's check if we have, let's see if we have EVRG here. What's the story with that? PE, earning per share, 3%, has been moving up. Let's check here, EVRG. Okay, so yeah, it's a little bit, I think it has its move already. I mean, when you look, it was here, and then starting from this point, and then if you were getting it from here, you would have got this up movement for a longer term, but it has had a choppy really period before getting to this. Yeah, not really interested into this one. Okay, Sundial, that should be some good news for that. And we are open. So let's see.
There you have the opening bell on Wall Street on this Fed Wednesday. Convey Health Solutions, ticker symbol CNVY, ringing that opening bell. I'm sure a very exciting day for that team over there. Andrew, so if the Fed is likely to still remain a friend to markets in the near term, what triggers that potential 10% to 15% pullback that you see in the cards this summer?
Well, yeah, I mean, the thing that worries me about the 10 to 15% pullback is it seems like everyone's expecting that. And, you know, we have had so little volatility since last summer that eventually we are set up. And what does worry me is the VIX is now down to a very low level that usually leads to a setup of some type of correction. So I don't know what it is. I just know that the market is more vulnerable now with low expectations of volatility. You want to get more cautious than with high expectations of volatility, which is what we've seen up until recently. So I don't know what it is. Maybe it's a macro event, and, you know, maybe it will be the Fed tapering. You know, could we have a correction on that? I just don't think it's going to be that substantial with, you know, look, take a step back. Think about this very clearly. Earnings are going up. We've had very good revisions, and we have Fed policy that's very accommodative. Those are two very powerful things. And yes, we're seeing some inflationary pressures, but I don't think it's substantial enough to really worry. And as we're seeing things like lumber and copper and some of these commodity inputs pull back, I think that further supports it. Maybe we just won't have a 10 to 15% correction. But what's important is, as opposed to trying to predict what will cause the correction, just be aware of the fact that the market is more vulnerable now because because the VIX volatility levels are very low, which means expectations of a pullback are low.
So, but at the same time, in your note, you also say stocks are going to go up after that. So everything's going to be fine. I mean, it's sort of channeling what is a frequent theme of our morning brief notes by Miles, that stocks tend to go up over time. Even if things pull back, they're probably then going to move higher.
Tapering is not tightening. Tapering is not tightening. So even if they say they're going to begin to taper, it's not tightening. And you want to remain on the side of equities until the Fed tightens. I think that's what's very, very important. And, you know, I go back to, boy, oh boy, there was a lot of reasons to be bearish last year, but the market did very well. And let's not forget why. It was central bank policy was very accommodative. And I think there is a major philosophical change going on at the Fed. The Fed is leaning more towards encouraging better employment, encouraging better labor wage gains at the expense of inflation. So I think they're going to sit on policy longer than people expect. And that could have implications for inflation down the road. That has implications for the types of stocks you want to own. And I, as a portfolio manager, I reflect that. But I think it's bullish for equities for a longer period of time.
And, you know, Andrew, we have about a minute left. I just want to ask, you know, quickly before you go, a conversation we've had, you know, recently with guests in the last few weeks is the state of the rotation that has defined markets into more value type names, cyclical type names, away from growth. Certainly signs of life in the NASDAQ as of late. What are you seeing in terms of how far that rotation has gone and may go?
Well, look, I do agree that some of these commodity prices is transitory. So you're starting to see lumber prices come down. You're seeing copper come down. I would be a little careful on oil because it's just had a big run, and I think that'll follow suit. So I think the argument of transitory is a valid one, and that's why you're seeing a rotation into growth stocks, because I think, you know, managers are saying, or investors saying, see, inflation is not a worry, so we can own the growth stock. And so they were very oversold relative to value. Value has done very well since last fall relative to growth. And so it doesn't surprise me we're getting a little bit of a rotation back. That's probably healthy for the market. But at the end of the day, don't lose sight of what the Fed is saying. The Fed's saying, we're not as worried about asset bubbles. We're not as worried about inflation. We're worried about income inequality. And that has inflationary implications down the road. So I think you'll get a little bit of a short-term growth bounce relative to inflationary cyclical stocks. But when I think about our portfolio and how we're weighted, I want to have a little bit more of those inflationary sensitive stocks more than normal, because that's what the Fed is saying is their priority.
Yeah, everyone very quick to go back to you know, those secular type names that worked over the last decade. But I think, as you kind of outlined there, different set of circumstances these days and a different mindset from the Fed. All right, Andrew Slimman with Morgan Stanley Investment Management. Andrew, always great to get your thoughts. Really appreciate it.
Yeah, I think that is always the case. The difference is that I think if you want to be on the safe side, I mean, go and look even the biggest hedge funds. They are all invested into these big FANG names, basically. So the Microsoft, Amazon, Google, Facebook, like these stocks are not going anywhere, and they are still gonna have their movement. Then you have also really high quality growth companies like, in my opinion, PayPal, Etsy, Square, like CrowdStrike. Like, I think these are really great companies that you can have, and they can't go. You can't go wrong with them. Even if for a short time they have a correction or anything like that, still I would say that we are in much better position to have those compared to, I don't know, Coca-Cola or anything. Of course, if you want the dividend, sure, of course, but it's not really what I'm looking for. I know that many people. Johnny is saying that I live off dividend. That's a way. That's a way. I was just about to say that there are people who are doing fantastic, and they're doing really good with those dividend stocks and things like Cokes, Pepsi, and things like that. But yeah. Right. So let's have another round of the stocks. SoFi is up to 3%. GM the same thing. Run is actually up 3%. Still wondering why Run is. As guidance cloud says miss high expectations. Ooh, yeah. That's not the good news generally. That doesn't look very good, especially the fact that there are usually other cloud relevant stocks will move with that. Speaking of that, let's check Vive. This is actually one of those stocks that I had the chance. I knew the pricing was good. I did all the due diligence that I had to do, and yet I didn't buy it. And look what happened. And then it went boom. And this is a very good company in my opinion. I still want to have a better entry than what it is right now. So I really want this to go to 250 range or something like that, and then I will actually add to that. But surprisingly, actually, the market is not really that bad. Let's check DraftKings. Okay, so DraftKings. Yeah, it's not really that bad. I mean, it's really still moving around the same area that was 48. It's still lower than my average buy price, but I don't have enough money to actually average down yet. If it goes lower, then it makes sense for me, but not right now. And what else do we have? We have IDEX. This is actually one of those companies that I don't mind to add if it goes below 2. If it goes below 2, I will add to the IDEX because I see a lot of potential with this one. And yeah, Jumia is up 0.5%. Let's see some of the losers. It seems like the market is going. Let's check Nasdaq. Let's check Nasdaq. Okay, so Nasdaq had this basically upward movement since the start of the market, or since market open, but yeah, let's see what Fed does. But I expected this move to be a little bit more on the downside, but again, consider that if people expect that Fed repeats the same stuff, so that alone would be very soothing for the market to know that, hey, we're still gonna have the same things mentioned again and again. They're talking about Coca-Cola. Let's hear.
20. I guess technically the branding is Euro 2020, even though it's 2021. Reminder: soccer, football, massively popular internationally, and obviously we forget about that here in the U.S. So when Ronaldo, coming off Portugal's win yesterday, says something at a press conference, it's a huge story. Now, the reason this became a story is, I believe, both The Guardian and The Telegraph running a headline saying that Ronaldo's move there, pushing the Coke bottles to the side in his press conference, cost the company $4 billion, something to this effect, which gets to another kind of pet. That's not a peeve. I mean, it is what it is. But the market capitalization, however you want to say it, I think capization is probably better, of all kinds of financial data. Like the stock market gained $10 billion in value. Stock market, passes 7 trillion in value for the first time. Bitcoin moves to X billion market cap, whatever it is just I don't remember that framing on every piece of stock move. I don't know if you guys feel like this is a new development as well, but talking about everything in terms of how much market cap is gained and lost feels like a new innovation. And I don't know, it just is a weird way to frame this kind of story. I mean, Coke shares were down like 0.3%, but framing it as a $4 billion loss because he pushed over the Coke bottles. it's just a strange framing, even though technically, like, yeah, I guess they lost $4 billion in market cap, but I mean, the market cap goes up and down $1 billion all the time, Saz. It just feels like a weird framing on the whole story.
Miles, you can appreciate this. Large round numbers, usually over $1 billion or over 500 million, they just click well. Hate to say it, it's just how it goes in the business.
Look,
Exactly.
Yeah, we're waiting for Dow 36,000 is really the milestone we're waiting for.
Exactly.
We have Kevin Hassett
Exactly.
on
He's
that.
exactly right. These are just, and they do it all the time. The clickbaits. I mean, even the toughest really media, they still do that, and that's the way that they are just paying their bills. Nothing really strange in my. Not that I like them to do that, but they do that. I mean, everybody knows that, and it was a very good comment by Brian Sazi there. But there was something else I wanted to check. Actually, I have a story about being a United fan. Patrice Evra was once in an interview, and he was talking about the fact that actually Ronaldo asked him after the training that, hey, come to my house, let's eat together and be my guest. And Patrice said that I went there. He said that I went there. We wanted to go for lunch, and there was like plain chicken and salad, and the drinks were only water, nothing else. And he said that we ate that, and then after a little bit, he told Evra that, hey, let's run a little bit. And then they came back behind their Ronaldo's house in their garden, and they started passing ball to each other. And then he said that let's go to gym. And Masvidal said that, why did we come to your house? It was easier at the club. So it really shows what a really dedicated person Cristiano Ronaldo is, and really how he got there. But because of that, I'm not surprised that he's not a big fan of even when he brings guests, he doesn't have any other drink than water. So yeah, some interesting story, at least from my point of view. Traders enters in the internet tech market. Okay, let's have a look. Ooh, I seriously didn't expect this one. 6% move by Sunrun. Ooh. I'm still negative on Sunrun, but I just want to see that, yeah. Good. Yeah. Yeah, all right. Nothing really going on here. I think. Oh. Yeah. All right, so let's go and look at some of our stocks that we were talking about. Let's see, Qualcomm. I think I've been checking Qualcomm every day since 2 weeks ago now. It's up 0.5%. Let's have a look at JD. JD's up. It didn't get to 69 price. Let's see, Jared, what Jared has to say.
We don't get much action until the 2 p.m. Fed decision is released, and then the real fireworks, if there are to be any had, is 2:30 to 3:30. That's when Powell is usually talking at the presser. So that's what traders are going to be focused on here. With all the talk about inflation, I think there's going to be a lot of focus on the bond market as well. We got the 10-year down below 1.5% right now, 1.49%. We had this big leg down. We kind of came up, looks like we're consolidating a little bit, but I would expect this move to continue. So what does that portend for the Fed? How does it read it? Well, be interesting to see. Maybe Powell will get some questions on that later today.
Yeah, the last time we had Brian Chung asking about the stock market and Dogecoin, so we'll see if Brian can break out the tricks to get Powell to talk about the 10-year yield. Jared, back to the real economy. Got some more housing data out this morning, and I think just such a fascinating market that economists will tell you continues to not look healthy, and yet still you try to go buy a home. Not exactly an easy situation these days.
Yeah, it is. People are priced out of the market right now. I think it's very instructive, the numbers that we got this morning. Housing starts came in at 3.6%. Those are houses that are actually being built right now, but permits came in at -3%. And so I think that's a reaction. Yes, it's a monthly number, maybe volatile, but I think it's a reaction to the higher prices and just kind of boost the argument for the inflation is transitory, that camp, because guess what? We've seen commodity prices come off. There's been a lot of reaction within the market, and now we're seeing in the economic data that commodity prices are coming down, and probably home prices, they might moderate a little bit. Not a lot, but it takes a little bit, and then we'll see the market maybe heat up in the back half of the year. But I'm really fascinated, as you are, to read these housing numbers that are coming out. Also, we get Lennar earnings after the bell. I will be breaking those.
And we look forward to that. And we look forward to watching you in the next couple of hours following ours. Thanks, Jared. Appreciate it. We're going to take a quick break. When we come back, in what has been a very hot market for...
What happened with that quality? Yeah, I think it's all right. 0.8. That was a trade for me. Happy with that. Let's see if I can get something else now. Sir, GME, Mara, Bitcoin. Let's look at 4 hour. So Bitcoin somehow got rejected by this 200 EMA. It feels like that Bitcoin will go lower than this. I'm not gonna sell Bitcoin, but I don't want to short Bitcoin. But this is exactly the entry that we are talking about. So if you were interested, this will be a kind of a trade at the time. So then you will have one. I mean, for Bitcoin you can go to. So this was a move. So we can keep it there, see if it hits it there or not. Then really nothing. Very interesting that the movement is more to the upside compared to down. Let's see, Frog. Okay, Frog is going down. Is there any news? Nothing from Frog here. GI, Xpeng, Baidu. Oh. Yeah, for Baidu, I want to actually buy here again. I don't want to put more money. It's not a big move right now. I think I'm around 2% down now. 2.3. It's okay. I have time. But honestly speaking, this is almost at the range. I mean, let's look at 30 minutes. 5 minutes. It should go down, but we'll see. I wanted again to double check DraftKings. Okay, so it goes to 50, and okay, so it's back now. DraftKings, I was under impression that it will actually be affected more with the Hindenburg research, but anyway, this is shows that when you have such a garbage research done, this will happen. So I mean, after the market was open yesterday, it just went up just like that. And now Cathie Wood bought, so again, but I'm repeating now myself, but I always see this kind of behavior that when market is when there is this sort of a short report, no matter how relevant or meaningful that is, the problem with that is that people usually do overreact to that news, but apparently the report was so bad that people just did not care about it. I mean, I honestly I'm looking to buy below 44, mostly 42.40 range of DraftKings. My price target for this one still long term is around 70 to 80 dollar, and I think it will get there sooner than later. But the problem is that I don't have enough money right now, and I want to keep a little bit money in case after today's Fed meeting we can actually add something to that position. So let's check again. The Chinese stock actually went down. If you are into that, like Yada was one of the ones I added exactly at this resistance point a little bit. It went up and it's coming back again. If it goes really around 1440 or these range, I'm gonna, if it goes below 15, I'm gonna add more to it. I think this is undervalued compared to its growth potential and basically its forward P ratios. So we'll see about that. Yeah, and also like Yada is doing a really good job in Europe, Norway as well. So we'll see how it turns out. Workhorse, it's down. Big is down. It's interesting. The big, I had it when it was around 40, and when I sold it around like 55, I thought that was like the stock will just plummet, but it is really in the still going in the upward direction. You can see that in the weekly it is going down. This is actually a sell signal for this, but it's over 200 EMA moving up like that. I'm not really confident of taking that position. Again, I don't sell that much, but you can see that this was the problem is that the signal was given too late. So when you look at this, it's already like 10% losing point, and that's a little bit too much for my taste basically. Let's have a look at SoFi and run. Okay, so the scalar is actually or Zscaler is actually up, CrowdStrike up again, BNGO up again. So really stocks are moving up. This is basically unlike what we expected. But I'm not gonna buy into anything right now. I mean, Baidu was minus, I guess, but again, I think if there is any hint of a bad news, it's safer to actually keep some money. I don't have much money now. I have only 2,000 buying power, and I don't want to sell anything right now. I emptied it. I actually reduced my position in some of the stocks that were flying in the past week or two. But okay, another one, DHI. This is one of the other stocks that I was looking into. Let's check DHI here. So it's a 10 PE ratio. It pays a dividend. The basically analyst basically estimation is at lowest 94. Then you can see that the hedge funds amount that they bought is again remaining almost the same, and a little bit into buying side. So it actually looks like a good and 90% it had like 9 people out of 10 have had buy rating on this. So I'm really looking into buying this, except that it already started a downtrend. I'm not sure if I should add something now and keep this for a longer trade. I think I'm not, because the upward movement compared to down is not that big. But I'm gonna keep an eye on DHI and see if this goes into more interesting prices to enter. All right, let's get back to some of the lists that we were looking. So Zillow, Chewy, then what else? I sold TDoc. I still think TDoc will go down, but I generally expect the market is on downtrend today. Before the actual meeting, it wasn't. So I actually took the got out of the trade. I mean, not much. So it is going down again. I think based on this, it got basically rejected here, and it was here. So I expected this to move basically to 144 or at least to 145 range. What was my price target for this? I mean, this was basically the trade that I was taking. So it's that, and then you have 1.5. Yeah. So to 142 actually. So this was one of my, I mean, you could also take some trade out here at 145 because this could be acting as a resistance, but yeah, I'm out of that trade anyway, because the movement generally looked like to be in the upside for some reason. Yeah. I don't think it's a bull trap. I don't believe that we are gonna go into higher prices as easily as we were in like 2020. But I guess that we're gonna have a little bit problem and downside before we go up again. I mean, this Fed meeting obviously is not something crazy in that end, but at least that's my opinion. I think we're gonna first go lower or stay at this range, play a little bit, and then go back up. This is and around September, I believe, where we actually see that the inflation data is not that serious anymore. So yeah. So again, we talked about Baidu yesterday with some of you guys, and one of the interesting thing is this. So if you get Baidu right now, the downtrend is really 5-4%. Okay, but the upward potential is crazy high. Honestly, I am just now being a little bit greedy, and I want this to come down even further, because one of the thing is that like if it breaks this resistance, it can go lower. So I'm gonna wait a little bit to see if it gets rejected here and then comes back up. If it comes back up here, and if it passes basically this high, then I'm gonna take a trade basically from here to, oh, what happened? From here to here. But also at the same time, I'm gonna keep some for a longer term, because in my opinion, Baidu is at a very good price right now. PDD is gonna be more interesting below this 117 range. I mean, this looks like could be ending. So yeah, I mean, I don't really want to put my money on this line because it's just 2 hit. If it's 3 hit, then you become more confident. But it looks like a channel, and I believe that people would respect that usually. So let's see about that one. What else did we want? Zillow. We wanted to check Zillow Group. Okay, so Zillow is up a bit. Yeah, 104, 105. This is the range. Interesting for entering Zillow. Do I have some buy order at Zillow 105? I have only at 105. Well, 105 actually makes sense for this. Let's go actually and put another Alex is struggling. I wanted this trade to come back to this 88. When it gets closer, actually, I will have a look if I want to keep this longer or not. It basically is on a higher time, uptrend. And so this was a buy basically for me. And I mean, this here was the trade for 1.5 times, and this one it just got in a day. But of course, if you are thinking of this, then you have to actually go to this line here. At least this is my one, and it would have got the trade here. I'm still keeping it as it is. I don't know, I just feel like it can get back to this 88 range, but we'll get to that. All right, I think that's it for now. I think we had a quick look at some of the main stocks. Again, to me right now, Baidu seems interesting. DraftKings moved up already, so that was one of the candidates for today's buy. What else? Pinterest. If you get it below 62.60, then add to it. Frog, Lemonade, Baidu, PDDZ, Lee, Space. How is Lee Autumn? Yeah, too much movement up. And Unity. Let's check Unity again. Yeah, I didn't take this trade actually. It just was for my own purpose. I did not get into it fast enough, but I can get it at this point. The problem was that again, today's meeting, I expected this to come down, and around 95. That's interesting. I did some analysis on Unity. Let me see, what was my entry price calculation. Where is Unity? Oh, okay. Did I actually wanted to buy at this range, so not even there. 83 euro was, sorry, $83 was the price I wanted to pay. Yeah, I don't think that's gonna happen now, unless this is like, if you see bad news, then it can of course come back. Yeah, so generally not much to discuss. I think the market is generally in the up trend compared to what was expected because of today's meeting. It's mixed day, mostly green, and yeah. So let's keep it like that. we come back at it at Fed meeting when they're actually releasing the statement and when they actually Jerome Powell is gonna speak. So there will be some interesting question there, and we try to follow that one up. Thanks everyone for joining. If you have enjoyed from the stream, please follow us on Twitch, like and subscribe into YouTube. Will be really appreciated. Thanks again for your time, and talk to you guys soon. Cheers. Bye.